do we have a growth scare? Like the most ungrowthy thing is people losing their jobs. And so when you saw the jobs report, which, our labor market is weakening, but how much is it weakening?
Get ready for a new episode of KP Talks Dollars and Cents. Learn financial literacy and get real-time updates on all things housing, finance, and real estate. So let's get started. Here's your host, Kevin Perenio.
Hey, it's KP coming to you live from Corona, California. Apologize for not getting my second video out last week. I took a vacation. I actually got away from the kids for a change. It was nice. But last week was pretty eventful. We had a growth scare, which is different than a recession scare slightly. It's a little nuanced, and I'll get into that. And then we had the king of buying the blanking dip, Warren Buffett, sold Apple stock and created the dip. And I'll explain that too. And we'll talk about the flow of money and how it's all interconnected, and we'll recap a little bit of last week. Okay, so the 10-year Treasury, which drives our mortgage interest rates and all of our industries, businesses, ancillary businesses all around it, it just keeps getting knocked down a peg, right? So what happened last week to me, and I was watching as the week went by, just couldn't quite get the 10-year Treasury yield above 4%. It could not close and break above it. And it was a crazy week for Treasury auctions. There was high-yield bond auctions. There's a lot of stuff. It's a lot of flow of money. But with the yen carry trade that started last week and unwound a little bit, it was somewhat orderly. But every single time we've seen some kind of event that comes out of nowhere where there could be market dislocation and tons of a contagion potential, like the banking crisis that we saw, like that dude that sold all the CBS stock to he had like $100 million out with like 5 different broker dealers, and that kind of unwound. And this yen carry trade unwound. If you want to look how George Soros made all his money, go look at his bet against the British sterling. You have all these trades when they unwind, you have these ripple effects, and it crushes balance sheets. Now, it was orderly because as crazy as Monday was in the market and as sharp of a sell-off it was, on the backs of not the strongest jobs report for the July jobs report. Everyone was in the moment on Monday, right? I heard economists like, we need to do 75 basis point cut right now, intermediate, and then another. Okay, all right. And then everyone kind of chilled out. And so, it's always interesting to see people's colors and, how they are, under pressure, under fire, if you will. Which, by the way, that was talked about. There was a nice interview that Elon Musk did with candidate Trump, former President Trump. I'm not too political, don't get into it, but it was very interesting to hear a podcast style chat amongst someone running for the highest and most powerful position in the world. It was refreshing, even if you don't like either one of those guys. But they talked a lot about a lot, and so it's worth a listen, I think. Do not get emotionally wound up. It's just politics. They don't really impact your life. What impacts our lives is the frickin' mortgage rates. So will this PPI report, Producer Price Index report, and the CPI report, the Consumer Price Index report, will those data continue to show disinflation or slowing growth of inflation? Remember, the last CPI print last month was outright deflation. Straight up was a negative number. So I don't know that we'll get that over the next 2 days. But that inflation data is very important to where interest rates are going to go. And, we saw a nice little uptick in locks last week. On the Last Word podcast that I did with Christy Sukamet, we missed you, Brian View. This is part of the Crispin series. Rob and Robbie promote that. This is our Friday podcast. Talked a little bit about, just to give an insight on our business. So in the month of July, we locked $1 billion in loans. And in the first 3 days of last week, we locked $250 million. And so just to kind of give perspective, I'm not talking about numbers. Trust me, there are way bigger lenders and there are smaller lenders and all that kind of stuff. But just to give perspective of how much business was done, how much money was circulated in our industry just last week. Now, growth scare. Well, what's going on with the growth scare? Now, a recession, of course, is, slower GDP, slowing growth, slowing consumer sentiment, consumer actual spending, which is about 70% of our GDP. Do we have a growth scare? Like the most ungrowthy thing is people losing their jobs. And so when you saw the jobs report, which, our labor market is weakening, but how much is it weakening? And so I'll throw a couple of perspectives out there. The bow tie economy. Oh, and a very interesting thing that the Fed always gets wrong on the unemployment rate. You're going to want to hear this. It was a very cool nugget that I found somewhere in one of my subscription services. Elliot Eisenberg, the bow tie economist, said the labor market is meaningfully weakening. A year ago, the year-over-year increase in the labor force was 3 million, and net employment gains were 2.9 million. 97% of job entrants found a job. So the labor market was growing and people were finding jobs, but that's not happening now. So the labor force is 1.3 million larger than it was year over year, but unemployment gains have been about 57,000. So just 4% of entrants have found employment. That's part of why the pace and the rate of the unemployment going up so quickly, which triggered the SOM rule, which we talked about last week, went from 3.5% to 4.3%. Now, I said in June, when the first week of June, when the unemployment rate was 4.1% for the May jobs report, and then and I said it again, the first week of July for the June jobs report, and then the first week of August here for our July jobs report. The Fed, all the way back when, was saying that our unemployment rate by the end of this year would be 4.1%. And I think the NBS Highway Crew even did a video on this recently, where one of the original forecasts for this year, they only had us at 4%. But their really big one recently, the last dot plot, they had us at 4.1% at the end of the year. We're at 4.3. So cut the rates, right? So now here's the interesting tidbit of how wrong the Fed gets it. So we know they're wrong. They're behind the curve. They're trying to play catch up. We had a little mini market meltdown and an orderly, unwind of the in-carry trade and all that kind of stuff. Fed forecasts, okay, this is very interesting, have underestimated the rise in unemployment by 2.5% on average. So, on average, okay? So if this holds, unemployment could rise above 7% in the coming potential downturn, which is hardly consistent with a shallow recession. You heard it here first, that stat. I was blown away when I heard it. I mean, in 49 days, we got with this Longshoremen, labor union, the people that, load and unload all the ships and the cargoes. Remember how crazy I showed you the line of all the boats out at the port of LA, which is really Long Beach. Which, by the way, I'm going to try and do my video Thursday from the ocean, so get ready. If that strike, if that strike starts in 49 days, get this. So remember, we had a very similar thing go on with these guys and gals at the Longshoremen. Is it Longshore person now? Okay, listen to this. If the shipping line, even 1 week of walkout, okay, would foul up deliveries of imported goods for at least 4 weeks, maybe 6, that would have a knock-on effect of our GDP at a time when labor is weakening. Now, we hope, obviously, that inflation continues to come down, which just means that the real interest rate of the Fed keeping it where it is even more restrictive. That real dollar, right? When inflation comes down, but the Fed keeps theirs right here, that real dollar, that real rate, the real interest rate crushes people, especially the poor. And if we have strikes and temporary layoffs and all these things that are coming, we might not see a 10-year Treasury over 4. We might be done. We might have been knocked down. So we'll see. We got some two really tier 1 data. Really, the CPI is the big one this week. I thought it was worth mentioning on that. Okay, let me talk real quick. We're at 8 minutes. I'm going to try and get this done in 2 minutes, okay? I thought, by the way, COVID is now the 10th leading cause of death in the U.S., down from 3rd at the height of the pandemic. The leading cause of death last year in 2023 is heart disease, cancer, and unintentional injuries, like some idiot letting their Tesla drive them and not looking at the road. I don't want to be a statistic. So just 3 million people died last year, about 6% less than the year before. Okay, so let's talk about Mr. Buffett. Mr. Buy the Dip. Okay, I wear a nice shirt about it every now and then. So, when you're a portfolio manager or a money manager, you don't like to have like an outsized position compared to the rest of the money. Like, you try and be diversified. His Apple stock at Berkshire Hathaway was a massive part of their portfolio. It was huge. They sold $80 billion worth, and that does, over time, erodes the price if there's more sellers than buyers, and that's a big number. Well, there's a dip. Apple dipped. but he's not going to buy it. He's a king of buying the dip. But he liked it, and he let it run for a long time, and he's sitting on a ton of cash now, especially after selling that massive winner. And I am not a financial advisor. I'm not responsible for your losses, only your profits. But people have a lot of decisions to make right now. Should they be buying the dip with all the stock market, chaos that we saw last Monday? Did it create this buying opportunity that was, is good? What was interesting is that, one of the things that stopped the sell-off of the stock market on Monday and the bond market when things were going crazy after the yen carry trade was unwinding was that the ISM services number showed a very favorable growth number. And in that report, services jobs sector actually grew a little bit. So, all this stuff will come out in the wash. Also, jobless claims on Thursday were a little lower than expected. So, is it a buy the effing dip moment? I'm not, again, I'm not trying to give advice. I mean, look, it could be a head fake. And GDP does continue to slow and unemployment does continue to ramp up. And the uncertainty about this election and geopolitical events and whatever, and the Fed cutting or not cutting or when they're cutting and all that kind of stuff and inflation and jobs. I don't know. It's a lot to keep track of. That's what we try and do here. We're all learning together. But there are some great companies that had a nice price that if you're a long-term holder, could be a time to get in. But don't hate me if you get crushed when things get crushed later, because you could have a bigger sell-off later in the year to create an even bigger opportunity. You're on your own. Have a great one. Catch you from the water on Thursday. Cheers. Hey, it's KP coming to you live from Catalina Island. This is the famous casino that no one gambles at anymore. It's like a movie theater now. There's a deer up here. Look at that little guy. See that little deer up there? Right above my head, right in the middle? Up there. They got deer on this island. They have buffalo on this island, which is pretty cool. We are on a manager's retreat for our wholesale and correspondent channel. Our founder and CEO, Paul Rozzo, likes to treat and serve fried chicken and panini and drinks, and it's just gorgeous out here. The history of this place is pretty amazing. Somewhere up there, let's see if I can get my little head out of the way. There's like a White House up there on the top of that hill. That's the Wrigley family, like as in Wrigley chewing gum. Oh, this little guy's got rocks falling. They used to have the Chicago Cubs spring training out here. And anyway, it's a real treat coming out here. Deer, fish, look at this water, it's gorgeous. You would almost not think we're heading into a possible recession. So let me talk. It's about 2 o'clock here on a Thursday afternoon. We're going to hang out at Descanso Beach for about an hour, then hit the road. We got some people got to get their flights back. Okay. So inflation's falling like a rock. The 10-2 yield curve hasn't quite uninverted. And oil prices are rising, and typically when they're high, because we don't drill domestically and rely on a bunch of terrorist nations, that helps put an economy into recession. And people are talking about it. I'm not saying we're in one, and we're going to check those boxes, but a lot of data points I'm going to go over real quick and kind of put it all together. Some are good, some are bad. So, again, like I said a year ago, or pretty much last December, this is what a soft landing looks like. It only gets harder from here. So let's talk about goods and bads. Retail sales came out today, and it was higher than expected. It was like the headline number was like 1% growth of retail sales in the month of July, mostly because of auto sales. And why are auto sales up? Well, because interest rates have been coming down. Prices of cars have been coming down. And so there are a lot of specials out there. You guys know I'm a Tesla fan. You ought to look at how cheap it is. That they're making cars in their disruptive, innovative way of literally in a 3-step process printing auto vehicles. And they are squeezing their operating leverage on their competition. Anyway, people are buying cars. You strip out that, retail sales was up 0.4%. So remember when bad news was good news for rates? Well, this was good news, so it was bad news for rates. And interest rates, we saw the 10-year Treasury get up to about 4.8. Got down to 3.8% on the yield. And then after that retail sales number went out, we just saw the 10-year Treasury go up today, close like, let's call it 390, 395, something like that. So it's in this range between 4% and 3.8%. And until we get maybe some weaker labor or some dovish comments from the Fed or the actual Fed rate cut, we might not see a 4% handle for the foreseeable future on the 10-year yield. The trend is your friend. Since October, rates have gone down. Refi activity is up with the loan application index data, which is huge. So that's where good news for the economy was bad news for rates. What was good news for rates was inflation. The CPI, which is a very big print, consumer price index, came in soft, except for owner's equivalent rent, the part of shelter, that kind of re-accelerated a little bit, right? OER, owner's equivalent rent, is as if you were, you own a property, what could you rent it for? And that kind of re-accelerated just a little bit in July. And auto insurance re-accelerated a little bit in July. Every other component in the CPI, all the rest, negative 0.04%. So that is outright deflation for the rest of the index. And that was positive for rates. OER and auto insurance will smooth out. You look back 12 months and that will smooth out. So inflation's falling like a rock. PPI, producer price index, year over year went from 2.7 to 2.2%. That's the 2% target right there. Gasoline prices going up a little bit in July, and some prices for goods were the higher points in the PPI, producer price index. Inflation is falling like a rock. Fed doesn't have a meeting until September 18th, where they are looking to cut. They have the Jackson Hole meeting this month. That's a big deal. Fed Chair Powell typically makes world economic shattering comments historically at this conference, which is like an intermeeting meeting. Of course, he's not going to do a cut from Jackson Hole, Wyoming, which is a beautiful place this time of year. So what else was out there this week? A lot of data points. We're hung on every little data point that's out there, every little report that comes out, and they all have different meanings. And we watch the stock market go up and go down. Stock market's rebounding after that Japan yen carry trade thing blew up, and the Japanese central bank said, "Oh yeah, we're not going to do that again. Sorry, we rose rates, so we're not going to raise them again." Bank of England, Canada, they're about to have some meetings. They're probably going to cut again, and we haven't cut yet. And so they're taming their inflation in those economies. So it's all just part of the sausage making process. It's all moving around. If you got back in the stock market and you bought the bounce, did you know on that Monday, last Monday, when the Japan trade blew up, only $1 billion of retail money got into the market, $14 billion of institutional money got into the market. They were setting some hooks in, thinking, hey, this is a nice bottom to trade. I am not a financial advisor. I'm not responsible for your losses, only your profits. But I made back all my losses from that one day in my little trader account and then some, and I've set some more bait and hook to try and ride this little wave up. And of course, sometime between now and the election is seasonally a kind of a slow time, so we might see another market correction, maybe even a bigger one. I can't tell. Like I said in my last video, you're on your own. But we've got a lot of data coming out between now and the next Fed meeting, and we'll be watching the economy. But for now, rates are still trending down. The trend is your friend, even if today's data was not the best. Some other nuggets. M&A activity is starting to pick up. Anyone heard of Mars, the makers of Snickers and M&Ms? They paid $36 billion in cash, the single largest M&A deal of the year, for a company that makes Cheez-It, Pringles, Pop-Tarts, Eggo, and Rice Krispie Treats, one of my favorites from elementary. So they're betting on the future. $36 billion cash deal, buy the stock at a 32% premium. That's a big bet. Cowboys, Dallas Cowboys. I went to the Rams game this weekend. We looked terrible. Trey Lance is a terrible option. Cowboys just got rated as a $10 billion sports franchise, the most valuable franchise on the planet. Pretty cool. Little nugget there for you. And we got the California Mortgage Bankers Association show coming up. Board meeting 3 o'clock Sunday, so I'll be there. And board dinner, camp pack, money raiser on Monday. Little golf deal. We're at Terranea and Palo Verde Country Club. and then open reception Monday night, and then all day Tuesday, Wednesday, and then I'll be at NAMA Connect next week in Orlando with Tony Thompson and team on a panel with my good friend Laura Brandeo, the future of lending. So got a lot of travel. It's travel time. It's Leo season. 48. When I don't shave, I look it. Apologize. My 5-year-old Serafina had ear tube surgery this morning. She was so sweet. Life's good, I guess. Keep it rocking and rolling. Let's keep grinding. It's getting really, really busy. I'll get back to y'all soon. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.